Back when I first started trading, there were a few key indicators that were explained to me as being simple enough for a beginner to understand, but important enough that professional traders still use them to this day. And chief among all of these indicators was the RSI. Now, we all know that Forex is really hard to learn. So why is it that this indicator is brought out there as being the be all and end all? It can do everything. It's really good. Well, it just simply is not the case. In fact, many scammers love to use this particular indicator because it is so easy to teach. Even though, in my professional but personal opinion, the RSI is completely useless in most cases. So let's look at the RSI now and show you a bit about it.
So let's go over here and actually bring up the RSI. Now, I just quickly want to go over what it is, and I also want to go over, my points about why I think this indicator here, if you want to call it that, because technically it is just useless. It's worthless. So number one, what exactly is the RSI? So the RSI refers to relative strength index, and it is a momentum oscillator that ranges from 0 to 100. Traders use it to measure the speed and change of price movements. Traditionally, it's used to identify overbought and oversold conditions. Now here on this chart, we can start to see that there really isn't any overbought and oversold conditions. If I go over to maybe a slightly better area, in fact, here would be really good. We've got an overbought condition here and a massively oversold condition here. In fact, if I keep on going over, you can see oversold conditions, oversold, oversold, overbought, massively overbought up here, and so on and so forth. Now, the RSI says that it is overbought when it is above this 70 line, right? It suggests that an asset, whether it's crypto, whether it's Forex, whether it's stocks, this asset is overbought and a reversal to the downside may be on the way. So we come up here and then we go down, right? Oversold, however, again, if we come over to here, well, what is this? It basically says the opposite. When the RSI drops below 30, this line representing 30, right? That's what it represents. Well, it suggests that the asset is oversold, signaling a potential reversal to the upside. In theory, this sounds great. How awesome. But here's the thing. While the RSI might look good on paper, it has several flaws that traders need to be aware of. Number one, it's a lagging indicator. This does not keep up with real-time movements, especially if you are scalping. It only reacts to price change after they have happened. So while it's telling you a market is overbought or oversold, it might have already been too late to act. By the time the RSI tells you to sell, the market may have already turned against you. You've also got false signals in strong trends. The RSI can give you a ton of false signals, an absolute ton. Imagine you're in a strong uptrend. In fact, let's find a strong uptrend, shall we? Here's a massively strong uptrend. Here's a massively strong uptrend. And in fact, this is quite a nice downtrend here. It's starting. It's a really big move. So let's actually say that. Imagine you're in a strong downtrend, like we can see here. And the RSI tells you that the market is coming to be oversold. Here we are, massively oversold, right? You exit, expecting a reversal. But the market just keeps on going down and going down and going down. Just like what we see on the chart here. In trending markets, the RSI often stays in the overbought or oversold zones for extended periods of time, leading to bad trades. Which brings me on to my third point. Overbought and oversold does not mean reversal. Just because the RSI hits 70, right, or it hits 30 and the market goes underneath it, does not mean that a reversal is imminent. Markets can stay overbought or oversold for a long period of time. Just look at this example on your screen here, right? Oversold continually falls down and will continue to fall down and 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 down, staying oversold at multiple points in the market, right? There was no reversal. There was no reversal. I wouldn't even consider this, what's going on here, a reversal. Oversold at multiple points, yet it just consolidates. Just consolidates, that's it, right? And realistically, this leads me to my fourth point. It is far too simplistic. So you're telling me that it hits this magic 70 line or this magic 30 line, and that's it. That's when the market is overbought and oversold. There's nothing else. There's nothing else that goes into it. It's just 70 and 30. These are the historical ranges that we use in order to determine whether a market is overbought or oversold. Now, markets today are extremely complex. It does not account for market fundamentals, news, macroeconomic factors, etc. It's a one-size-fits-all approach in a world where you need a more comprehensive strategy. If you were to even include this, I mean, you're going to have to use multiple other indicators. And let's even talk about the best loser wins. You know, that New York best-selling time books by Tom, and I apologize, Tom, if you are listening to this, probably not, last name Hogard, I believe, where he says overbought and oversold is a myth. It doesn't exist, right? He has an entire chapter on basically this indicator here saying why it's crap. Because it's telling you to counter trend trade. When we know from looking at this area here, if we would have gone into any of these oversold signals to go into reversal, we would have lost one time, right? Two times, definitely over here. And then if it comes, I think we're all the way towards the front here. This is as far as it goes. Yep, there we go. We'd only have one on this one particular time over here. But again, we could probably go over here and say, okay, well, it said it was overbought at this point. So this point here, the market decided to continue to go up. Oh, look, it's a strong uptrend. How, in any way, are you supposed to, as a beginner trader, look at this, go, okay, it's overbought, and win? How are you supposed to do this? It is a singularly awful indicator that makes no sense. Scammers used it on me 8 years ago. Scammers have been using it every single day, every single week. I'm sure there is a use for it, but if there is people like Tom Hogard out there who has been on Telegram and has shown people that he's made hundreds of thousands of dollars live for years on there. There is me, another professional trader, who has taught multiple people and also got them into places where they have retired, gone back to uni to fund themselves, etc. And this is my profession saying overbought and oversold doesn't really exist. I'm not saying buying pressure and selling pressure don't exist. I'm not saying that reversals can't happen, and I'm not saying that this can't be used in conjunction with some other indicators, but there are so many better ones out there. If you're looking at a strategy right now, today, that's using the RSI, and you're learning it, throw it in the bin. Don't trust that person. Leave them alone, because it just doesn't make sense. What is overbought? What is oversold? When a market like this can continue to go from, what's this, Monday the 16th of September all the way to the 27th of September over here and continue to go up. We have over here, what's this, Tuesday the 3rd of September goes all the way down to the 16th. We can go on any pair, and I've only been looking at one. Let's go on AUD USD, completely different to this. And we'll just have a look at some of the charts over there. Again, massive uptrend, starts at the 11th of September. Oh, whoopsies. Apologies, guys. Starts at the 12th of September, 12th, 11th, and it ends over here on the 30th. 15 days of it basically going up. And it's the same thing. It's the 30th of September now. Where are we? It's your Friday the 11th of October. It's still going down. Yet, this one at 2 points has said, here, it was oversold, so go in for a buy. And here, it was oversold, go in for a buy. You've just lost both times. It was overbought here. Actually, you would have made some money. It was overbought here. You would have lost. This point, overbought. Overbought. You would have lost. This point here, overbought. Maybe you would have made a tiny bit of money. That's about it. Same going through here. Oversold, you would have lost. Etc, etc, etc. Leave this one alone. Don't touch it. That is why the RSI sucks. Anyway, guys, that is it from me. Please subscribe. Please like this video. Comment it. And I will see you in the next one. Have a prosperous trading day. Bye.